Hey guys, welcome back to the Capital Mindset Show. In fulfillment of the Discord votes, we tallied them up, or the robots tallied them up. I did no such thing. And this video won in a landslide. So I think it was expected that this video would win in a landslide. So you guys know by the title what it is. This video I know is going to piss some of you off, and I apologize in advance, but you know what? What am I going to do? Some people just do not like it when you talk about their favorite content creators, I guess. So we already, this is I think the third iteration of portfolio review. And so right off the bat, I want to kind of state my preliminary thoughts before we begin. I think this portfolio is probably going to be way worse than something like Robert's portfolio, which Robert's portfolio, like I stated in that video, I didn't necessarily disagree with the holdings. I just disagreed with the allocation, and that's just the market. And then the Everything Money's portfolio, or Paul, I think is his name. Yeah, Paul, that guy. So his portfolio was, I think, a lot of noob tier investments, in my opinion. That's the word I used to describe. So I didn't really like that one. If I be honest, I'd prefer Rob's right now. We'll take a look at this one. I could be wrong. I know for sure there are 3 stocks in the top of mind that I know he owns. Well, no. There's a bunch. There's a bunch more because I've been discussing with other people who are talking about his portfolio. So I know that there's a couple. So I already know some of the positions, and I've already made videos, I guess, on some of them, not all of them. So we'll discuss it here today, and I'll kind of zoom through a little bit because we don't want to hear everything this person has to say. We just kind of want to find out where the meat of the bones is, and kind of just I'll share my thoughts, okay? And if you don't want to hear my thoughts on these, you don't have to watch this video, just so you know. So if you're watching or continuing to watch this video and it's going to upset you, you're a masochist. Okay, you're a masochist, and there's nothing I can do about you, okay? Or there's nothing I can do for you. All right, so let's take a look at the video. We'll start.
So I released a video last night called Cathie Wood is in deep trouble, discussing Cathie Wood's positions at ARK, and yeah, a lot of them are getting absolutely destroyed, including Teladoc, and talked about that. I saw this comment and said, okay, now let's talk about Corsair, Tattooed Chef, Honest, Planet 13.
Absolutely hilarious comment. Oh, whoever did that. Absolutely hilarious. All right.
Dropbox, Skyworks, and
all right,
I saw that comment, and
so
what I'm planning on doing in the situation. Okay, we'll start out the least bad. And then it's just going to get progressively much worse as this video goes on.
All right, so he said this is the least bad. So I'm taking a look at it. Foot Locker, I understand. We had that little bit of an experiment with Foot Locker. It turned out really well. That was like a 20% gain on that one when it collapsed, and then we bought it. You can go check out the Foot Locker video. I think I called it A Line in the Sand. That's the title of that video, and I talk about buying it. And then in the subsequent portfolio videos, I talk about it, and then I think there might not have been a dedicated video for me selling it, but I sold it. It hasn't moved yet, so it's still about the same price of where I sold it, around there. I think it sold at like 31-ish or almost 32. It has barely moved. JP Morgan Chase, that one of my favorite banks. I prefer Bank of America, one of my favorite banks. I sold JP Morgan Chase last year, along with Bank of America, in preparation for, not preparations, it makes me sound like a prepper, but for what I believe was the liquidity crunch, and the only one that remained was Citigroup. I've talked about that, I guess, extensively now. Don't want to repeat too much for those of you who kind of think of me as like repeating. I do that because there's always new people joining Capital Mindset, so I like to give them some context. Nordstrom would never touch that with a 10-foot pole because I don't understand retail. My wife might, but I wouldn't. But you've done really well on that one. Look at that, 15.07, looking at 26.9. It's probably, let me see actually how it's performed since then. So it's down 6% today. Yeah, it's pretty much gone nowhere. So it made that nice bump, right? Where did he buy it? He probably bought it, yeah, around here, 2020. So it was a 2020 play. So, but that a lot of stocks were just stupidly cheap, and there was a high in the 30s. Yeah, so he's holding on, I think, for longer than he probably should have, because this jump right here. It's not so much that, oh, obviously hindsight's 2020. No, it's also that this is a struggling business. So when you get a massive jump like this, you definitely want to de-risk. You want to de-risk, take some profits off the table, especially if you got it in a short amount of time. I don't really care about that tax consequence because I'd rather keep the gains and then pay the tax than lose those gains per se. But that's just me. So. Yeah, this is a struggling business. But they have Trunk Club. They compete with Stitch Fix. They're I guess doing better than Stitch Fix. I'd say they're okay business. Okay business. All right. So then Pfizer, a lot of people associate Pfizer with the COVID vaccine. They have a lot of things going on under the hood. A lot of things that, they had the merger with Pt3 and Upjohn. So they spun that off. They got some debt off their balance sheet. They also had a lot of different approvals. So you got to keep that in mind. And of course, they had the vaccine, which is basically like a cash cow at this point. So a lot of people associated that. So retail probably thought the move from 33 to 50 was that. Now, in that instance, that it was stayed in the 30s for quite some time. I think it was being disrespected, in my personal opinion. Now, Pfizer going forward, you got to be a little bit more cautious, but he's up decent amount, about 49.8%. So cool. And again, cool beans on Nordstrom, and again, JP Morgan he didn't sell, but this portfolio is doing pretty good. It's doing okay. Qualcomm's doing really well, 120%. Good business, good moat, very strong moat, very small allocation, very interestingly small allocation. Wait, am I reading this right? Yeah, very interestingly small allocation. So he probably regrets that. I'm sure he probably says that somewhere. He's like, I regret not putting as much. But we're in the interest of time going to zip through that. Tapestry, again, a business I wouldn't really touch. Okay, so that one was a good buy, I guess, because that was probably a depressed price level. My wife doesn't like any of the brands in Tapestry. Therefore, it's not a buy. Therefore, it's a short. I'm just kidding. Okay, good to see that we also had Walgreens in common. Walgreens was a stock. I'm out of it. So for those of you who've been watching the Capital Mindset channel for quite some time now, and you watched it at least in 2021, you know that Walgreens was part of the portfolio. But the portfolio wasn't public back then, but I did talk about Walgreens, and I sold Walgreens around $51, $52-ish. So I'm already out of Walgreens, but I understand the thesis. I can comprehend it. My cost base was probably a little bit higher than this, and so, but now my performance is locked in and been pretty good, and I actually locked in at long-term capital gains, which was good. So, yeah. Decent still if he were to sell out, but not as good as it would have been, because that's a good cost basis. Wynn Resorts, I wouldn't touch that at all. For me, I have a little bit of concerns for their exposure to China, capital restrictions and the like. I've talked briefly about that kind of stuff, and he is down 11.69%. Wynn Resorts is basically where it is right now, so it hasn't really changed. Walgreens, actually, let's pull up Walgreens, because I think let's see where Walgreens. I don't pay attention really. Okay, so it's down a little bit more, and wow, look at that retracement. Yeah, you can see. This is around-ish the time I sold all my shares. I didn't sell it at the top, but I sold-ish around here, and so it didn't make it past the next year. Liquidity crunch time. No. Yeah, we actually revisited here a couple times. I remember when I originally bought it, but I actually did not do the buys. I bought it around here in this range. I didn't sell here, and I waited to the very end, and I got lucky that I was able to regain this price point, and then I paid long-term capital gains instead of short-term. So it was a good move in hindsight. I was fighting maybe over for a couple percentage points or so. All right, so let's go back. Wynn Resorts, yeah, I wouldn't touch that. So let's move on.
Okay, so this is my dividends only account. It's gone up because Qualcomm's such a great company, and I got a chance to buy it at such a low price, $66 a share, and to have gone as let's call it weak sauce as I did there.
Interesting.
Tapestry's always done is phenomenal. It's come down some, but it's still done pretty darn well. But this stock was up to almost $50. Right, and Revolve's done some.
This is the next thing. So I see some like dots. I guess he's just telling us what the cost basis is there. Cost basis there. So Tesla is his largest holding. Congratulations. Yeah, so it's congratulations on that return, 1,965%. Put a total of 21,000 in. Got 440,000. I feel like he did sell some Amazon. Sorry, not Amazon, some Tesla, because I did know, because he would brag about it back in the day a little bit, and when I say back in the day, like not even a year ago, and so I thought it was like at 600,000. So he probably sold some for whatever reason. Well, I would be taking profits. So I think that was a good move. I'd be taking more profits. But if he did that, they would draw down the return number here, and that's part of his like sales pitch. So I know why he's stuck, by the way, and that's why I would never enter this business type model. Like there's so much stress. If you're really good investor, you don't need to try. Oh, by the way, I just looked at his eyes. He doesn't appear like he's. I mean, it's just me, or is he like gonna cry? Looks like he's gonna cry. But okay. I think, like, personally, I think he's, like, stuck in holding Tesla. He's got to keep this up. I think this is public portfolio. The one that
probably has. Now you're looking at the public account.
yeah.
All right.
Okay, so this is the public account. I just needed him to say it. So yeah, so he can't really sell this because if he does, it makes this percentage return look worse per se, and it is still like almost like a marketing gimmick at this point. I doubt that. I don't know if he really does believe that this is going to like 10x again, but if it does 10x again, he'll save himself. You know, who knows? Who absolutely knows? I have no idea. All right, Tattooed Chef, he's down about like 15%. I have zero idea why he's so obsessed with this business. Now, I remember back in the original analysis of Tattooed Chef, the original analysis, which I've since updated and given some more feedback, that the original analysis was about $2 a share in terms of buy price valuation for a Tattooed Chef. And at the time, it was close to like $20. So I don't think the same people would be laughing at that now. Now it's more of a possibility than when it was at $20 a share. And yeah, people think, by the way, you guys think that I use like complicated words sometimes. I've had that criticisms here and there. It's like, no, I actually simplify a lot of the under the hood stuff for the analysis. Like, you know, you guys need to understand, like the model valuation, like where I come up with some of the stuff. We're basically just only looking at the front-facing end of it, and we're not looking like really like under the hood because, well, for one, that's like my own design and whatever. But yeah, so $2, and we're getting there. Corsair looks like we're actually going to get to that price target of about $14-ish. Not really a price target, price of interest of $14. Again, another stock that I got a little bit of ridicule for because it was a lot higher, and so people were like, "That's impossible." Another one this is the noob tier stock of Jeremy because Everything Money has their noob tier stock where they didn't, I guess, comprehend that sales would actually decline. And so he's down 50% on there. Revolve's fantastic business. Now we'll take a look at Revolve stock. My wife has been involved in Revolve stock. She already sold Revolve stock, but my gosh. And by the way, her cost base is slightly better than Jeremy's. No, my wife did a fantastic job investing in Revolve because she's a big customer of Revolve. So she bought Revolve, and then at one point, oh my God, that position was destroying me. Like she would laugh because she doesn't do this, and then she was laughing at me because her returns and her portfolio were absolutely ridiculous with Revolve. So her cost base was slightly better than Jeremy's, and she's already out of Revolve, by the way. So if you take a look at Revolve, I'm pretty sure she sold when it was a ridiculous size of the portfolio. Like the thing grew. I want to say it got to close to like 80% of her portfolio, something like that, something ridiculous. And so then she's like, all right, I'm going to trim and diversify. I'm like, I'm so proud of you. No, she's a very intelligent woman. I married intelligently. Bragging now about my wife. Haha. All right. So, yeah, look at the 5-year. I think my wife sold like literally around here, not here. I remember because it went up further and my wife was like, oh, I should have held. And it's like, no, don't worry. Don't worry, you did good. Don't cry over spilled milk. And now, so let me see, because it was around like 74, 75. So it's down 55%. So she now, I gotta actually let me text her. I'm gonna text her that. Yeah, let me text her real quick. Sorry. All right, I just text her to check out Revolve stock. So she's gonna be like, oh my gosh. That's not how she sounds, obviously, but yeah. So since all-time highs, though, let's see where Revolve's been doing. 60%, and yeah, so more recently. So since he's did in this video, Revolve's actually crashed a little bit more. But yeah, all right, so cool. All right, so let's take a look at the next one. Facebook, okay, or Meta, I agree. I know some of it triggers you, Meta. He has a better cost base than me because I ruined my cost basis. I added to my Meta position. And by the way, I would never judge someone on portfolio size, position size. I care about allocation percentage, So I don't care if someone's portfolio is smaller. I only care that, their allocation, I'll judge them on the allocation. So Meta, I think that, the allocation should be higher, but of these stocks so far, I have no idea why Corsair is that high of an allocation. Absolutely ridiculous. No, and TTCF, I don't understand. Maybe I'll be proven wrong, but thus far I haven't. And, there is a price at which I would consider TTCF an interesting speculation. But, I remember, I have a good memory, guys. And so I remember some of your criticisms. So I won't call you out for it. Don't worry. I'm not petty. But, and some of you have actually learned. Because, when I started the channel, if I want to help people, I'm not trying to be confrontational. Maybe I've been confrontational like once thus far. Not confrontational, but you know what I mean. All right, Skyworks Solutions, RF chip design. I don't think you have any business investing in this business unless you understand, RF chip design to some degree, and I don't know if Jeremy does. I have a doubt for it. So, like, for example, if my workplace asks me to do an analysis on a business I have no subject matter expert opinion on, I will consult a subject matter expert and try to gauge their opinion on things and try to, hopefully with my brain that I have, tried my best to understand Skyworks Solutions. And that was the Microsoft just coming out with like, oh, here are the news. It's like, no, I don't care. All right, so Skyworks Solutions, 117, I think it's up to like 105 today. Off the top of my head. Yeah, I think it's like 105, $107 today. So it's down even more. Honest, I know this because I just did a video on the YouTube Index, plugging my video. So go check out the YouTube Index if you are interested. It's a 6-minute-ish video. Explain the YouTube Index is for fun. You guys can go check that out. So Honest, I remember it's down like 10% today alone. It's like a $3 stock. I've talked about Honest, and again, I get some flack for that, for a very minority of people, because I think the majority of the Capital Mindset subscribers do agree with some of my opinions that I put out there, but some people do disagree. And so thus far, again, like if you, well, I'll share my thoughts at the end. Planet 13, okay, I understand the thesis there. You go to a store, you see it's busy, and you buy it. Yeah, I completely understand. I think this one's down to $1.06. Dropbox, that's a stock. So we have two stocks that we kind of have in common here currently so far. And so I understand the thesis of Dropbox. I have a better cost basis than you. So cool. Avant Brands, don't understand that. That's a micro cap weed company that's could make it somewhere, but the allocation's, in my opinion, a little bit irresponsible for the size of this portfolio. I think no, 25K out of a 1.2 mil. That's okay. That's okay. That's a okay allocation, I'd say. It's not crazy. Elf Beauty, makeup company, discount retail makeup company. Okay, that was a pretty good spot, to be honest, because this one was one that my wife also actually participated in, funnily enough. So she participated in this one because she kind of understands more women consumer trends and stuff, and so she purchased Elf, yeah, she did pretty well. She's also out of that one too, but Oatly, I haven't done a video on this one, but I need to do a video on that one. Strongman Personal Finance did a video on this one, and it's absolutely hilarious. And actually, his little sister, I'm calling her his little sister. Maybe some of you know who his little sister is. She makes me cringe so hard. I will not do a video on her because, but if you guys request it and it gets voted, I will do a portfolio review of hers. Oh my gosh, she's like the most cringe person on YouTube thus far. Actually, no, there's one more person that's more cringe, but I do love him to death. So I'm not going to make a video on him ever. And he's number one. He is the number one investor. You guys know who that is. So PayPal is, I understand the thesis. I'm considering PayPal, by the way. So PayPal, let's actually take a look. I have to do an update video on PayPal, and I keep saying that. And, it deserves one. But yeah, PayPal is down 7.86%. I've talked not too good things about PayPal and when it was higher, and I still also got some pushback for it. I know some of you do like PayPal. I've stated what I stated about PayPal. It's my opinion. I'm honest with my opinion. And so I might add PayPal. I might actually buy PayPal. I still haven't bought Align Technology, but I said I might buy. And Amazon. Haha, Amazon. What was your cost basis? I have a better cost basis. Haha. No, Amazon, we already made the video on Amazon. If you haven't seen that video, go check that out. Amazon is now down drastically, so he is down a lot more on Amazon. I think Tesla's about the same today. So not a good buy on Amazon. I completely disagree with whatever thesis he had on buying Amazon, but the allocation is so tiny that, at the same time, I can't disagree with it either. But I wouldn't be buying Amazon, even if it's no. Like if his strategy is to add more and more and more to Amazon, then okay, like that's fair. That's fair. But if he's like a one and done and that's it, that was not a good buy in Amazon. He could have easily done some very quick preliminary analysis and saved some money there. PayPal, yeah. So that's pretty much my thoughts on any of this. PayPal, I understand. I understand the thesis behind it, but I just didn't think it's value. It was a better value than when I was originally doing videos on PayPal. So congrats on that. You did good on that. All right, let's kind of move on.
That one's come down a lot. Drop for cost basis on that. So those two have just gotten absolutely destroyed. You can do the math on how much we're down on those position shares.
Cool,
the stock probably closing or market We're at
People are not
5,800.
here for this.
An absolute disaster. What was going to have time the market? I tried to play that game and lost bad. Okay, I tried to play the whole, oh, let me get in the market, let me get out of the market. Oh, time to get back in. Oh, time to get back out. Dude, so stressful. And I ended up, being in a way worse position. And I was like, dude, if I just held through and bought the dip instead of trying to get in, get out, get in, get out, I would have been much better off. And so, I just stayed with kind of my game plan. Now, this is where it starts to get really ugly. What you're looking at here, this is my main private account.
See, okay, now, okay, this is your main private account. I don't know if this is his only position, but my gosh, down 53.4%. The allocation is what's just irresponsible. And if anyone was following, you see, I swear his face looks like it's gonna like cry a little bit. He looks stressed. 100% he looks stressed. And of course you're stressed. I mean, I don't know why. I don't know what the obsession was with this enterprise. Like putting 1 million, and that doesn't include the other position portfolio. So you have more in this company. You have basically, when you put money into a company and the allocation is kind of like a vote of confidence of something. So if you put 20% of your money or of your capital into a particular company, you're basically voting that I want to, or I believe that 1/4 of my entire net worth, let's say, or my portfolio, should be in that company. That is a statement of confidence that that is going to succeed. So, I mean, when we consider the size, that's a lot, man. $17 a share. I mean, that's when I was already doing, heavy criticisms of Tattooed Chef. You should have watched my videos, but I'm a minnow. You're a giant whale. I'm a little minnow. You definitely don't watch my videos. And probably like my videos are a little probably boring for you, Jeremy. But I don't know.
It hurts me to see it. 1790. Oh man, that's rough.
Okay, cool. That's rough. Yeah.
Or so down.
Okay. Oh, Honest. Oh, okay. This is the other one I knew about as well. Honest. Yeah, it's lower even now. I don't understand the thesis you have because you're buying a company where, is in the expensive range in a consumer backdrop environment where the consumer is probably going to get a little bit squeezed here, and you're owning the premium brand that's like not even like that premium. Again, like I made the meme that, if you haven't seen the meme about this guy that I made, it's pretty hilarious because genuinely, when I saw, or from my understanding, a lot of the thesis that he does is he looks at the SKUs, he goes to stores and he like takes a picture and sees like how many people are buying something, and that's pretty much the extent of his thing. So he misunderstands Peter Lynch entirely, and I think he quotes Peter Lynch hilariously, but it just goes right over his head. So I don't think I'll go into that here, but
yeah.
Yeah, so he's down about $1 million, almost $1 million when you count both of these positions. Just as like, this is a case study, everyone, about very irresponsible capital allocation. What's going to happen? So he's down about 626,000 here, and then he's down about another 241,000. So he's nearly down $1 million. A lot of people don't have $1 million, but remember, he's that $1 million came from the people who gave him money. Some of it came from YouTube, but a lot of it came from people through his business, right? Financial Fortress, Financial Education, Jeremy, Financial Fortress, whatever it's called. And I've received, if you understand the tonality I have now is because I've received countless emails from various individuals who you can't help but feel bad for. Some of you might be saying like, well, it was their choice. Well, you have to also understand that in when some people are a little bit new and they're desperate, they come onto the internet and they're sometimes the most susceptible to people like Jeremy here. And like I almost feel bad for Jeremy, but I can't feel bad for him at all. I feel bad for maybe, like, if I'm being honest, I feel bad for his kids. But because his kids, we have to assume they're obviously innocent. This individual, maybe he's not intelligent enough to understand what it is that he's doing. That is a very big possibility. That is a big possibility that maybe he does believe that somehow his product offers value to people, and that in no way, shape, or form is it actually an extraction for no value in return. But no, that's just, I just wanted to say that. But so if you guys can understand the context, that I don't know if Strongman gets the same kinds of emails, but I did for a bit, and they're really hard to read sometimes because these are people who are really like struggling, and some of them were encouraged. According, this is anecdotal, so maybe it's not true, but I'm going to assume for my part that I might believe it, that they were encouraged to use financial instruments that carry higher levels of interest because they couldn't afford to give the cash. And someone that claims to be financial education definitely shouldn't be encouraging people to do that, especially people who are maybe not making that much money. Very dangerous, very dangerous. But anyways.
Okay, but you look at these and you're like, my gosh, that's just devastating, right? $900,000+ down on those two stocks. But here's kind of the way I personally look at this, right? So with Tattooed Chef, I'm 100% convinced this is going to be a $5 to $10 billion market cap in 2030 based upon where I see their revenues going over the coming years, based upon where I see their net income going, their margins going, everything like that, okay? It's a $687 million market cap right now. So I think this company is going to be a $5 to $10 billion company. That's why I'm investing in it, right? And I'm investing in this company, and so whether it's at a
literally, I don't understand like the thesis. 5 to 10 billion. Like, where's that number coming? See, that anyone can say that. It's like, I think Apple's going to be a $5 trillion company one day. It's like, okay, or I'm going to take one of my stocks. I'm going to say like Overstock's going to be worth $50 billion one day. It's like, okay, and, or you're going to say it's going to be worth 10 billion. I think because you're looking at Conagra. Like if I'm trying to think like you, which I got to admit is kind of difficult. I think that you really pull that number out because you think they're going to become Conagra, which is possible, but like, it's kind of a stretch. But
a $687 million market cap or a $1 billion market cap or a $1.5 billion market cap, right? It's all, in the end, it's all going to end up being gravy in my personal opinion, right? And right now I'm going down with the ship. I'm the captain of the Titanic and we're going to the bottom of the ocean. Little do they know, this is not a regular ship. We're in a submarine and we're going to come back up, baby, and we're going to fire the nukes, okay?
See, the voice crack makes me think that he is like
a nuclear submarine, but they don't know that right now. But it's been rough, right? And so with me, with the stock like Tattooed Chef, I just continue to buy the dip, and I don't know if the stock is bottomed now. I don't know if it still has more to go. Whatever, like whatever the short term is, at this point it doesn't even matter. The stock goes to 7, 6, amazing, and so Tattooed Chef, I just gotta wait. I just gotta give that time. Right now, not everybody sees it. Also, the plant-based food movement, we're not going backwards on this. We're just gonna continue to move forward on.
I don't know about that because humans are omnivore. Humans are omnivores, so. I haven't really shared my thoughts on this, but be careful with bro science. Bro science, nutrient science is like always ever changing. I mean, I've had like conversation with like subject matter experts in the hard sciences, and I've asked their opinions on like this, and it's called bro science a little bit as a joke, at least for the ones individuals I've spoken to, and this whole belief that humans are completely capable without supplementation, and even then, a little bit questionable, but without supplementation of completely going vegan is perhaps not viable long-term for people. Now, with supplementation, perhaps yes, but that has to do with like, actual ingestion of the same nutrients that you would otherwise get, because we are omnivores, and so you're not asking for my opinion on that, so I'll just refrain from giving it further. But I think, like, for example, lab-grown meat is perhaps, if you're doing it for the cruelty of animals or whatever, I think lab-grown meat is where you'd probably be best at investing in a speculative nature. But yeah.
this, and you just have to let these things play out. I think, in 5 or 10 years from now, I think everybody's going to look back and be like, oh, it was so obvious. Like, why didn't we see like how big these plant-based companies were going to get? But right now, like, people don't see it, and I understand it. Like, I remember talking to friends about, EVs were going to be the future, and this is like 5 years ago, and they're like, dude, are you crazy? Like, no, that's not happening.
Well, okay, here's like a big problem with your thesis. So, for example, let's say the industry grows tremendously. The barriers to entry for plant-based foods isn't necessarily all that difficult. If that is where the industry is going to go, that's where the industry is going to go. But it's not like something that happens overnight. It happens very gradually. I think the vegan population is very small. You're basically buying a niche company within the vegan space, first of all. And even vegans, I don't think necessarily want to eat Tattooed Chef, because a lot of vegans tend to be health focused, and that's like the primary, and the Tattooed Chef bowls are not healthy. I've had some of them just out of curiosity, and like the one I like perhaps is like the macaroni, but like I prefer to make actual macaroni or other vegan macaroni brands, not like them. It's not filling. I know that's a common criticism I hear, but you also have to understand like it's a plant-based thing, because when I eat, for example, when I go to like a BurgerFi, for example, I should be careful saying that, but when I eat a plant-based burger, but not the fake meat variant, the actual just like plant-based, I prefer those. By the way, I hate like Beyond Meat and Impossible, despise it. I actually would, if I'm gonna eat a veggie burger, I like the veggie burger, like a bean burger. Those are pretty light. They're not very filling, and it's because of what the components of what you're consuming really are. So yeah.
Happening now,
right,
folks just don't see it. So the
no one
Floyd
sees it.
Mayweather, the
No one
greatest
sees it.
defensive fighter ever, right?
Love it.
I'm
Compare
going
yourself
through
to that.
me, not switching, not doing this, doing that. Oh, let me get in the market. Oh, let me get.
All right, that's whatever he says. All right, yeah, that's basically my thoughts. My thoughts on this creator, Financial Education. He's one of the larger YouTube content creators. I think his portfolio was quite obviously for a while, and the criticism has been consistent on a lot of his companies, so it's nothing new. I know you might say it's easy to kick them when they're down. It's like, no, but the criticism is consistent. It's not like I'm coming out of the woodwork and criticizing his portfolio. He's a very interesting asset allocation dude. I don't know what his background is per se, but that's argument from authority. That shouldn't really matter too much. And then so by looking then secondarily or primarily judging by performance, he hasn't been too good on that front either. And then depends on like the time frame which you measure, because if you measure the time frame of when we were having a liquidity boom, he did great, because you see you had Tesla perform very well, carry him forward. You had a bunch of his other more speculative stocks. I know that I actually wrote a list here because I wanted to make sure, just in case I know some of you would be like, you didn't do your research. I did my research a little bit. So he also had Upwork, which was a good play, I guess, and at the time. So actually, I think that was one of my favorite ones that I saw that he used to have. He used to have Cirrus Logic. And he got rid of that one. He used to have. There's some in the past that he had, and that was. Let's see here. What's this one? This one is GoPro. GoPro he's had in the past. At one point it was Monster Energy. He did good on that one, supposedly. We'll take his word for it. And yeah, so if we culminate that, he's had some good plays, but it seems like his plays are kind of chaotic and random. And when you go back and look at the thesis of each one, it's basically like, yeah, chaotic and random. And so luck had a huge part to play in it, in my opinion. And he's been very lucky thus far in kind of convincing people that he's a good allocator of capital. And a lot of people have paid him a lot of money. So, I would say to him, if he's really good allocator of capital, he doesn't really need to proceed any further. With over $1 million in capital, you could, if you're really good, if you're crap, whatever. But if you're really good, you don't really need anything else. You probably have enough to start other business lines, and you already have other business lines. You have like this application, the Hungry Bowl, which I took a look, and I think that business model is there. It could be improved upon. I'm not going to say it here, but I think the business model is weak. It's not really scalable. Yeah, you got lucky, and you apparently also have some ventures with Graham Stephan, some other group ventures. So, if I was talking to him, and if I was friends with him, which I'm not, and I don't think I want to be, I would say you should quit while you're ahead. You've done well, and this YouTube thing, or not the YouTube thing. Keep doing the YouTube thing and talk about it, but stop charging people upwards of $20,000 for your stuff. I mean, that's kind of an ask. It's upwards because it varies. So some of the emails I received, the prices were always different. But yeah. All right. On that note, guys, thank you guys so much for watching. The final conclusion is this portfolio is So we way prefer the other two people that I've reviewed thus far. And if the next votes happen, I'm going to be reviewing a couple more. We'll see what the voting kind of comes out. But on that note, guys, thank you guys so much for watching. I'll see you guys in the next one. Bye.